Hey, what's up, everybody? It is Monday, February 7th. I hope you had a good weekend. All right, let's talk about what's going on. So, I'm going to update my outlook for February because we have a fiscal situation that starting to look pretty strong for the month at least. We flipped back into deficit. The federal budget is now a deficit of $93 billion for the month. That's pretty good, and that's probably going to expand because we have a quarterly interest payment that will be going out on February 15th, and that's going to be about 44 billion. And I think I mentioned this in my last video. February is usually historically the month where we see the largest of the IRS tax refunds. You know, the most IRS tax refunds usually go out in February. So February is usually a big fiscal flow month. So I think risk assets like stocks, commodities, I think they could be well supported in the month of February. Beyond February, you know, look, it gets a little bit harder to call because we have the Fed meeting on March 16th, where right now looks like a probability of a 25 basis point rate hike. Markets pricing in a smaller probability of a 50 basis points rate hike. So it could be some turbulence in March. And again, not sure how these fiscal flows will look in March. We could start to trend back down again towards the recent baseline that I have been, talking about, which is like around 480 billion a month. Right now, we're trending at about 590 billion a month. I mean, that's strong. That's strong. But again, February is an unusual month because of the quarterly interest payment and because of those IRS tax refunds. So, you gotta respect February as a fiscal month because historically it's pretty strong. Market sentiment is still negative. So it would actually be a good thing to purge some of that negative sentiment during the month. In other words, if we get a rebound in the stock market in February and everybody starts getting bullish again, I think it would set up a good opportunity in March and then through April, because April again is a tax month. It's going to be a big net drain on the government transfers to the economy. So we're kind of like back in an environment which is, I would call, a normal environment. You know, we got really very used to the last 2 years of massive fiscal stimulus that was ongoing, month after month after month, and the market was just going straight up in a straight line trajectory, and it kind of lulled us into this mentality of, we can't have corrections and up and down and choppy trading behavior. But we're kind of back in that pattern, and I would say that's a normal pattern. We had that pattern. That pattern existed for years prior to the pandemic, when again, the pandemic, we had this massive stimulus that was ongoing for basically like 2 years. So there's two ways you can play this. I mean, if you like trading the market, you can definitely trade it based on these flows. Like right now, I'm telling you, February is going to be a positive month. Or if you're a long-term investor, which I recommend, you just wait for the pullbacks and you build your position and you add to, good stocks, hopefully that you currently own, and you accumulate, dollar cost average. All right, so much for that. Let me talk. Oh, a couple of things I do want to mention. I saw today in the fiscal flows, the line items, food stamps. I was kind of surprised by this. Food stamp payments for this fiscal year so far, 56 billion. And that compares to 37 billion at this time last year. Now, I would have thought with the stronger economy and low unemployment and job growth, like I was pretty surprised to see food stamp benefits at 56 billion. I mean, a significant increase over where we were last year. I mean, that kind of took me by surprise. One other thing, I am seeing a modest uptrend in unemployment benefits being paid out. In other words, the average daily benefits that the government's sending out right now, 166 million. That's the highest since January 24th, and we came off a bottom of 122 million. So that thing is like slowly trending up. It's not like a spike or anything like that, but it does suggest, maybe a little bit of weakness creeping into the labor market. So I got to keep an eye on that. What else? Oil. I mean, if you look at the Russia, Ukraine, the US, NATO thing, I mean, the headlines are, to me, they're ridiculously frightening. The level of belligerent rhetoric by the US government, every day. I mean, Russia's going to invade, get out of Ukraine. We had, it was last week, I think, or maybe the week before, the Ukrainian president Zelensky held a press conference where he said, hey, hold on. None of that stuff is happening. We are here. We know what's going on. This is being, inflamed by rhetoric out of Washington and the Western media. Just calm down, everybody. I mean, he pushed back really, really hard on the media reports that are pervasive and nonstop with this warmongering rhetoric. It's funny, for a guy, Biden, who was faced with a massive inflationary problem, at least as most people see it. I mean, it almost seems to me like, this guy is shooting himself in the foot, because this inflammatory rhetoric is doing one thing right now, and that's keeping the price of oil elevated. I mean, today, another threat, like if you invade, so far, there are no plans to invade, but they keep pushing this line. This is coming from, the warmongers in Washington. They want Russia to invade for the simple reason that they have a whole entire list of sanctions and countermeasures that they're dying to do it. They're dying to do it. One of them is the end of Nord Stream 2, okay? Nord Stream 2, which, by the way, is totally operational, but it's not pumping gas into Germany yet because it hasn't been certified. And it hasn't been certified, obviously, because of political reasons. The United States is pressuring Germany not to certify the project. And the Russians are like, okay, don't certify it. It's up to you. I mean, it's built, it's ready to go. It's been primed with gas already. Don't certify it. The United States wants to end Nord Stream 2, and that's one of the sanctions. So, here's Biden, who is faced with, I think, what's going to be a disastrous midterm election result for the Democrats. And largely because I think people are really, really upset about, what's been going on with prices and inflation. I still say that the price increases that we've seen are largely attributed to the pandemic and supply shortages and supply constraints and all that stuff. Nevertheless, the line that the White House has taken on this whole Ukraine-Russia thing is just continuing to drive oil prices up through the roof. And I mean, for a guy who is faced with an inflation problem in his administration, I mean, the brains over there don't seem to have too much going on inside their heads. I mean, you would think they'd want to calm the situation down to allow for oil prices to come down. I mean, OPEC Plus is almost kind of helping out in that this month they're going to start with a 400,000 barrel a day output increase, and that's going to continue through the end of September to try to take back the 3.5 million barrel a day cut that was put through in April 2020. But I mean, he's doing everything to negate that which could be a positive thing for prices. In other words, bringing oil prices down. I mean, it's just, I sit back and I look at this situation and I'm really left scratching my head. I mean, what kind of strategy is this? You have to be so intensely wanting a confrontation with Russia above all else. Like, it's not even a popular position in polls of Americans. I mean, they don't really care. I mean, they're thinking about, their own personal situation, inflation, incomes, jobs, healthcare, infrastructure, all right? But they're like, the administration is tunnel vision focused on this Ukraine-Russia situation, and as a result, they're just keeping oil prices high. And if something does erupt, I mean, you're going to see a big, big spike in oil. I've seen already, oil producers have been long oil futures for, I mean, it must be like the last 12 weeks. I just went over the numbers earlier today. I mean, they've been selling a little bit into the rally little by little, but they are net long, which is an unusual position for them, because they own the physical. They're usually net sellers because they like to lock in their profits in the futures market. They're just outright long the futures market. So, I mean, they see it. And so the rhetoric is really underpinning prices. And for a guy who's faced with an inflation problem, it just seems like a really, really stupid strategy. I don't know, but I mean, who knows? So, there we are. So it looks like February could be a positive month, a rebound month for stocks, because we're going to have a strong fiscal situation in February with a large deficit, a lot of government transfers into the economy through the interest channel and also through those IRS tax refunds. So February should be good, but we'll keep an eye on it for now. Anyway, that's it for the report today. Oh yeah, today is Monday, so I did send out my MMT Trader report. Some interesting developments in the banking data. You might want to check it out. If so, if you're looking for an individual subscription to MMT Trader, send me an email at mnorman@pitbulleconomics.com. We'll see if we can work something out. Take care. Bye-bye.